Boeing has more bad news. Cat says sales are down. Second wave of virus is coming around. And we're going to take a look at what's going to happen next week in the stock market, along with some important technical indicators. So stay tuned. We start right now. Thanks for watching. This is Richard with Wisdom Investor. We're going to talk about where this market is headed next week. Before we get into that and look at some of the technical indicators, let's just take a look at some important information out here today. Caterpillar extending plant closures with virus sapping demand. It says here, company temporarily shut down more than 10 factories in May. Part of this big move to the upside has been the projections and the hope that the economy is going to open right away. We may be getting evidence of otherwise. Closures totaling 2 weeks or longer, document shows. Let's look at the CAT stock here for just a moment. CAT's had a nice rebound here, but had an island reversal. We're going to talk about that in a minute. Also, second U.S. virus wave emerges as cases top 2 million. So we're getting a rise in the virus in Texas, Arizona, Florida, California. Experts say that surges can't be linked directly to openings. Also, report Boeing 737 MAX will not fly until September at the earliest. Let's take a look at the Boeing stock. It looks very much like Caterpillar. Had this surge up. Again, another island top here. We're going to take a look at the island top here in just a moment. Let's look at the Dow Jones Industrials. Again, another island top. Island tops are typically bearish. Along with selling to the downside, they can be very detrimental to the markets. Let's look at our technical indicators on the Dow Jones Industrials. Stochastics here. You can see it's dropping down, dropping past that 50% line. That's typically bearish. Now, the good news here is we're using the PPO here, very much like the MACD, but it's starting to lean down. When it breaks below zero, that's when it really does the most danger. So this is the Dow Jones Industrials DIA ETF. We've got resistance above on that gap. We've also got options expiration coming next week. Typically, options expiration can be positive going into the last part of the week. Doesn't mean we can't have some more downturn. We could get a couple more days to the downturn and even come down to these support levels. A lot will depend what happens over the weekend. Let's look at this bearish island reversal information here. Here's the bearish island reversal here, and you can see what follows a downtrend. Typically is a leading indicator that there is going to be more action to the downside. It says here, a bearish island reversal begins with a typical uptrend. The bulls are in control and the price gap's upward. It remains high for a day or several days. However, following the positive jump, there's an extreme change in market sentiment, causing a gap down and downtrend. The sharp and sudden change may be prompted by a current event or news story that occurs before the market opens or closes. Sounds like just about all of that has happened. This is the Dow Jones Industrials on a weekly chart. Again, the move higher, and then this week has ended in the red with increasing volume to the downside. So increasing volume to the downside in the Dow Jones Industrials. Let's look at the action here on the QQQ. Now we had the waterfall move to the downside. We had a beautiful recovery up close to 2% at the open, but it quickly gave way. Now the positive news here, by the way, we're looking at a 10-minute chart here on the QQQ Nasdaq 100. This was the end of close on Thursday, gapped up on Friday. We tried to drop below the low on Thursday, and there wasn't enough sellers to drive it low, and we recovered. We actually ended up on the day in the QQQ. So that's positive news that we couldn't drive lower. If we would have had 2 days lower, especially if it would have gapped down on Friday and kept selling off, that would be, I think, pretty disastrous. The fact that it held is partial good news. We need to have at least one more day of holding up here, then I think we've got room for a bounce higher. But if we get some type of bad news over the weekend, then that, I think, could be detrimental here for the QQQ and a lot of the markets in general. Here's the Nasdaq. Here's the big move down. It's about, I think, 4 or 5% down. It's holding the moving average line here, support right there. Then we have support on down below around 230. end of the day around 236. Now it is possible we could get a couple of days down. Some of the indicators, most all of the indicators are pointing down for right now. Let's look at the QQQ. Again, here's the stochastic. This is pushing down. It's going to take a couple of days for basing out and starting to turn back up. Now right now, the way these indicators look is that we are going to go lower. So the big picture here, the uptrend hasn't been totally broken for the Nasdaq. As far as long-term investors, we're still bullish for long-term investors. Short-term investors, we're close to a point where we probably want to be out of the market for swing trades. Typically, I like to use the 3 EMA crossover to the 20 for short-term swing trades, and we've been positive on that ever since April. But we're getting real close to a crossover to the downside here. So stay tuned.